everyone, good morning. You're watching Market Fatafat right here on ET Now. I'm Mubina Kapasi. As we speak, the Nifty has managed to once again reclaim 12,000. The Sensex is just about 10 odd points away from, in fact, we have hit 40,000 on the Sensex as well. 295 points higher for the Sensex. The mid-cap index is gaining 0.5%. Small cap index still struggling to catch up with the vigor and the fervor that we are seeing in the benchmarks. But well, yes, that certainly is something one must keep their eyes out on. But here are the other stocks we are tracking for you right here on the show. The Motown misery continues as Maruti sees the sharpest drop in its monthly sales in 7 years. The stock price, however, has managed to bounce back. It's 1% higher. I suppose could not keep away from the excitement seen in the markets. Hero sales have jumped 14% on a month-on-month basis. That stock is in top gear, and other numbers include Escorts, M&M, as well as Bajaj Auto, all of them seeing a move come by post their May sale numbers. Demand drought certainly is something that is continuing to hurt the sales, so the Motown misery continues. Interestingly, however, the auto index has managed to snap that 4-day losing streak and is among the top gainers today in trade. Well, USA certainly seems to be in the mood to break trade ties, and this time around it has targeted India. It's terminated the preferential trade agreement for India, and that is something that is going to hurt a whole host of exports that do transpire under GSP. According to Nomura, this includes vegetable products, food and beverages, mineral products, chemical and products, as well as plastic and rubber articles. So watch out for companies that trade in these sectors. Well, adding to the blues is also the GDP data. The growth for Q4 has come in sub 6% at 5.8%. This is at a 5-year low. The FY19 figure as well has come in sub 7% at 6.8%. Certainly disappointing. In fact, now we are no longer the fastest growing economy. If you take the FY19 figure, China in fact has overtaken us. CLSA believes that rates could fall 100 bips from here on post this GDP number. All eyes are, of course, on what Shakti Kanta Das and his team will do come Thursday. Well, watch out also for the slide in oil, the only supporting factor, I suppose, for the Indian equity markets. Crude continues to decline for the 5th straight day. Brent prices, in fact, are at $61 per barrel. This on account of all of the supply surplus that seems to be coming back to the market, and of course demand fears as well, with the US bringing up trade factors with almost every second country now. And crude, like I said, is the only supporting factor for the Indian macros at this juncture. Take a look at individual stocks now. SpiceJet today is among the big gainers in trade after the company has said that it has received several offers for a stake buy, with several parties indicating that they are interested in picking up a stake in SpiceJet. In fact, the chairman has said that they are willing to evaluate offers only if they are strategic in nature. Well, more stock-related news, and take a look at Apollo Hospitals. The sharp rally seen in the stock, in fact, it's the top Nifty 500 gainer, surging almost 9% in trade. Morgan Stanley now has maintained an overweight on the stock. They see potential for large capacity creation, and do remember, post the fourth quarter numbers, brokerages have certainly been very, very optimistic. Well, those were the top headlines at this hour. Markets, meantime, looking pretty steady, like I said. But let's, talk about earnings and go back to that. We have BEL that has delivered its fourth quarter numbers. And, 7% uptick on revenue. Profits have been able to grow 20%, aided by margins. So not bad a set. Let's bring on board Mr. M.V. Gautama, the CMD, to talk about these numbers. Mr. Gautama, thank you for joining in. And let's start off with the key reasons for the outperformance and over guidance that you have given out then.
Main reason for this stellar performance during 2018-19 is our contribution to Election Commission of India. We were able to acquire additional orders also during the year from Election Commission, and today 400 out of 542 parliament seats, the elections were held using Bell supplied electronic voting machines and VVPATs. So we have nearly 2,600 crores of revenues coming from supply of EVM and VVPAT this year. We were able to maintain our profitability in spite of competition because of our focus on improving indigenization and increasing value addition in-house.
Okay, Mr. Gautama, while your margins have done well in the fourth quarter, there are concerns about margin trajectory going forward. So if you could just tell us what is it that BEL will be able to do in terms of margins, or what are you targeting for FY20 there?
Going forward, typically I expect Bharat Electronics to maintain 17 to 19% EBITDA margins. I can assure you that by exceeding our top line, we are going to maintain the bottom line also to the satisfaction of the investors.
Do you think BEL will be able to achieve double-digit revenue growth then in FY20?
Yes, as you have seen, we were able to acquire quite a significant volume of orders during 2018-19, and we expect that type of order acquisition even during the current year because of projects like Akash 7 squadrons, then coastal surveillance phase 2. They are all lined up in a big way, and we expect to get anywhere 15,000 plus minus 2,000, 3,000 crores of orders acquisition even during the current financial year. Now, our top line, we expect to grow 15 plus minus 2% range. This is what I was telling even during the last year. I expect this type of growth rate will be there in Bharat Electronics next 3 to 4 years continuously.
Okay, so confident about double-digit revenue growth and 17 to 19% margins as well. Pretty impressive. Now let's talk about order book and guidance for FY20.
Last year, the major order we acquired was for LR-SAM system for P-17 Alpha. That is a major contributor. And coming this year, expected orders, Akash 7 Squadron, Coastal Surveillance Phase 2, then upgrade of EW system. These are going to be the major orders what we are expecting in near future. Then in this present financial year, we wanted to start delivery of LR-SAM. We have today received 11 ship sets. So first ship set LR-SAM we wanted to deliver. Then apart from this, we have big plans of completing deliveries of electronic warfare equipment on order with BEL. Then night vision equipment. Then homeland security and smart city projects, completion of homeland security and smart city projects. So this year also we are targeting to grow minimum 13% compared to last year.
All right, Mr. Gautama, congratulations once again on a great set. We wish you good luck for FY20. BEL flattened out in trade, but what are the other big movers and shakers in trade today? Let's bring on board then Jayesh Khilnani, ET Now's research analyst, and on the technicals we have with us today Sameer Chavan of Angel Broking, and as always Kunal Bothra. Thanks to all of you for joining in, and let's kickstart the show with the big, outlier in trade. M&M bucking the trend seen in the auto index and in the Nifty. May auto sale numbers stood at 45,420 odd units, a minor uptick seen versus what it delivered in the previous month, an uptick of only approximately 4% so nothing great really to talk about. And then we also do have the tractor sales number. Do remember that this certainly was something which was very keenly watched out for, given the fact that there are no doubt concerns with respect to rural demand not being that great, and hence the tractor sale number as well was weak. However, it's come in approximately at 24,700. So yes, it has missed the ET Now poll of 28,100, and it's a decline of 14% on a month-on-month basis. So the auto number has come marginally above at 45,000, but the tractor number has declined, has come in below expectations. So M&M is among the top Nifty losers. However, that too has been able to recuperate much of those losses. Kunal, FMCG continues to show a lot of traction, and once again, Godrej Consumer stays on top of your list.
Oh, we highlighted the stock on Friday as well, Mubina, when the stock was trading sub 680 levels. We mentioned that how the stock is forming a inverse and shoulder pattern, and it's nearing a breakout. So the breakout has happened today. The stock has opened with a decent gap up opening, and now I believe that the stock has ample support at that 680 to 700 zone. So I think as a a fresh breakout trade, traders could look at a buy on Godrej CP at current levels. I would place a target close to 730 now, and stop loss to be kept at 690.
And the uptick in Godrej Consumer continues. Jayesh, how are the numbers for escorts in the month of May?
Well, Mubina, if you have a look at the actual number, that has come in about 17% lower. at about 6,800 odd units versus the 8,325 on a year-on-year basis. Now, this is of course below the expectation that ET Now poll had suggested, which was about 5,200 units. So significantly lower than that. But like you were mentioning, it's all about the auto index and how all the stocks are trading at high point. Escorts too has seen a sharp recovery from the day's low and currently trading well in the positive.
All right, so that's Escorts, and it's in fact at the day's high as we speak. Sameet, Britannia as well, it's another day where we are seeing a smart bounce in the stock. In fact, it's once again hovering near the day's high. Your view here?
See, after recent correction, we witnessed a good, smart recovery in this counter since last 3-4 weeks. It's now heading towards its 200-day moving average. But the kind of, price and volume activity we have seen in last, couple of weeks, it suggests that the stock would surpass this level, and the recent bounce back is likely to extend. So we would expect, this stock to head towards 3080, 3150 over the next few days. One should trade with a positive bias, and now 2900, 2920 seems to be a very strong support zone.
All right, that's the view coming in on a Britannia Industries. IOC and those stocks continue to rally, this on account of crude continuing to fall. Fifth straight day of a decline witnessed in WTI and Brent prices. Brent in fact is now at $61 per barrel. This puts it at a multi-week low, in fact a multi-month low at that. And the decline in crude is something that is causing IOC, BPCL, HPCL, all of them to perk up very smartly in trade. Kunal, what is it that's causing you to have a buy stance on CESC?
It's a very strong breakout, Mubina. I think in terms of price, in terms of volumes, I was looking at the OI built up as well. I think there are a lot of positives which are coming across for the stock price. So, stock which is, traditionally a low beta or slightly moderate beta, not even exactly low beta, but slightly moderate beta. If you see the stock breaking out of key resistances on the back of volumes and open interest built up, start of a fresh expiry. So all of that is very positive in terms of readings and observations. So I believe CESC could be a good buy even at current levels. 800 plus could be a target range, and stop loss could now be trailed up higher because the stock has moved up in the last half an hour. 750 could be the stop loss.
In fact, is 3.5% higher, so great gain seen today in trade. Jayesh, we just had Ashok Leyland's numbers released. How were they?
Well, Mubina, if you have a look at how Ashok Leyland panned out, total sales came in at about 13,000 odd units as compared to 13,660 on a year-on-year basis. That's a 4% downtake on a YOY basis. Also, if you have a look at the MHCV sales, those were down about 14% on a year-on-year basis. While the LCV sales also, that in fact grew about 31%, and the stock, similar to other auto stocks, is off the day's low.
Well, yes, that it certainly is, and Ashok Leyland is in fact now 2% higher in trade. Sameet, another sector that's really being able to, continue or extend its bounce is these IT names, and TCS in particular is standing out. What would you recommend here?
Yes, during the early part of May, we saw the stock hitting its record highs, and then seeing a sharp correction towards its important short-term moving averages. But since last a week or so, we did witness a smart recovery, a sharp bounce back from lower levels. So that clearly suggests that the overall bias in IT index still remains bullish. So within the overall consolidation, this stock has been clearly outperforming its some of the peer counters. And soon we expect this stock to head towards its record highs.
Could hit its record highs. That's what Sameet believes about TCS. Apollo Hospitals, meantime, take a look at the way that stock is surging and how, in fact, it's the top gainer on the Nifty 500 list as well, more than 9% of gains. Remember, it came out with its fourth quarter numbers, and since then, brokerages have been very, very optimistic. Today as well, we had Morgan Stanley, which maintained an overweight stance with a target at 1667 rupees. That's an 300 uptick that they are expecting from these levels as well. They do believe, of course, that the growth momentum will be sustained, and there is large capacity creation that has taken place over the past 4 to 5 years. So that as well will give a leg up to growth for Apollo Hospitals going forward. It's more than 9% of gains seen in the stock. In fact, Sunita Reddy, Managing Director of Apollo Hospitals, had a word to say about the strong quarterly show. Listen in to what she had to say.
So for revenue, clearly in the hospitals, it was more volumes coming in because we actually filled out the specialities by adding more doctors. We've added about 52 consultants, which really brought in significant revenue, especially in all our new hospitals. We also undertook a cost cutting exercise which improved our margins significantly. And for the pharmacies, what we did is we added 152 stores, but we improved the margin to 5.2% by stocking, looking at the way that we stock the stores and to see that the prescription fulfillment ratios have improved.
Okay, very quickly, moving on. Kunal, Adani Gas, I think this one's making a debut on your list.
So yeah, Mubina, I think it's a phenomenal. The last 4-5 months have been just about exceptional for the stock price trend. It's a recently listed name in terms of the price history, but whatever price history the stock is suggesting, the way the stock is moving up in the last 4-5 months, volume wise, in terms of price pattern wise, it's not made a fresh 4-month low as well. In fact, on the monthly charts as well, it's just about making a pattern of higher highs and higher lows. So mid cap stock trading with high volumes and strong momentum should be looked at as a buy. I believe a best strategy over here should be a buy on dips, given the fact that the stock is in strong momentum. Targets to be kept almost 8 to 10% higher from current levels.
Okay, so Kunal has a buy on Adani Gas. Well, quick break right here on the show. Do come right back. We'll continue with the countdown of the big movers and shakers. Welcome back. You're watching Market Fatafat on ET now. Let's continue with the countdown of movers and shakers and more auto sale numbers. Jayesh, how are the numbers for Atul Auto?
Well, Mubina, this is one auto stock which has bucked the trend on the other side because it's currently trading in the negative zone. If you have a look at the monthly sales numbers, the May auto sales totaled about nearly 3,500 units as compared to nearly 4,000 the same month a year ago, which is a downtake of about 13%. And like I was mentioning, currently trading at near the day's low, down about 2.5%.
Okay, well, yeah, it's bucking the trend in the markets in general and, of course, in the auto index too. Samit, Shriram Transport, a lot of these NBFCs have been all over the place, really. Shriram Transport among them. Today, it's 2% higher. What would you recommend one should do with these names?
See, on Friday only we saw this stock attempting to surpass its 200-day moving average. So on an intraday basis, yes, it did. But on a closing basis, we saw again the stock correcting below its 200-day moving average. But today, the kind of price action and the volume action that we are seeing since last couple of hours, stock is sustaining beyond its 200-day moving average, and the overall structure looks positive. So we are a bit on the stock, and as a disclosure, we have recommended this to our clients as well. So we remain a bit for an immediate target of somewhere around 12.25, and one can go long with a stop loss of 11.60.
Okay, Shriram Transport, Sameer is quite optimistic on this one. Take a look at Hero MotoCorp, and that one certainly is leading the rally for the auto index, taking it higher as well. Top Nifty gainer, top Nifty auto gainer as well, 5.3% higher. The May sale number has come in at 6.5 lakh units, higher by 14% on a month-on-month basis. We did have the analyst meet as well that did take place, and interestingly, CLSA has a sell stance over here. However, some things that they have flagged off that the company is focusing on. Well, firstly, it's on brands versus aggressive pricing, and they are confident on meeting the BS6 norms too. They will continue focusing on premium motorcycles and 125cc scooters. But for now, of course, the stock is high by 5% regardless of the CLA sell stance. And yeah, decent uptick seen, 14% on a month-on-month basis for May sales number. I think in this environment where everyone's talking about weak auto demand, the fact that Hero has been able to deliver double-digit growth is something that's very encouraging. More two-wheeler numbers then, and Jayesh, while Hero may have declined risen 14% in terms of sales, Eicher has declined by a similar quantum.
That's right, Mubina. If you have a look at the Royal Enfield sales number, which is the most important number that the market in fact tracks, that has seen a downtick of about 17% on a year-on-year basis. The May sales stood at about 62,400 odd units compared to 75,000 that we had seen a year ago. However, if you have a look at where the ET pole was, that was at about 64,500, a slight miss as compared to the ET now pole as well. But the stock, I tell you what, has been quite volatile. It opened in the negative, recovered all of its morning losses, was trading for the better part of the day in the green. But in the last half an hour, if you see the intraday chart, it has given up and currently trading towards the day's low.
Okay, so that's the that's the news on Eicher Motors, and it slumped to the day's low. Take a look at these paint stocks. Berger, of course, had seen that massive 10% rise on Friday's trading session. Today, Asian Paint seems to be taking it forward 3.5% higher, 1454. In fact, it's at a multi-week high. Of course, once again, it's about crude prices. 40% of the raw material basket comprises crude derivatives, so it's really no surprise then that Brent being at 61 is something that has caused Asian Paints to go higher in trade. Okay, Jayesh, again over to you. Tata Motors, what's the number over there looking like?
So, Meena, if you have a look at the domestic CV sales for the month of May, those came in at nearly 30,000 units, which is down about 20% on a year-on-year basis. The passenger vehicle wholesale number for the month of May stood at about 10,900 odd units, which also was down about nearly 40% on a year-on-year basis. But similar has been the case with the stock performance. It has risen from the day's low and about just about 2.5% off the day's low.
All right, that's Tata Motors. Samit, very quickly, let's can we get in Samit's perspective as well? Okay, Samit, over to you then. Aurobindo Pharma really bucking the trend seen over there, at least the market trend at large. And pharma in general has been in a bit of in doldrums at this point. What would you recommend here?
Yes, Mubina, the entire pharma space has been undergoing a massive price-wise as well as time-wise correction, and this stock in the recent past had corrected quite sharply. So there has been no respite if you see overall its price correction over the past couple of months. So next support is somewhere around 635, 625, and it would be seen as a key support zone. So these are the levels to watch out for. If the stock has to give some kind of a bounce back, it has to first sustain and see some kind of buying interest around this important support zone.
All right, that's Aurobindo Pharma for you. Bharati Airtel, meantime, take a look at the way that stock is reacting. Firstly, the rights issue that was opened by the company just about last month has been fully subscribed, in fact oversubscribed. 105.6% is the sort of demand it has received. And also the mobile ARPU has risen 18.6% on a sequential basis. UBS as a buyer with a target at 390 rupees as they believe that the minimum ARPU plans have driven the fourth quarter growth. Stock has come off completely from the day's high, now only at 350 rupees. Kunal, today we are seeing a lot of action in some of these gas stocks. Gujarat Gas is one. IGL2 is gaining smartly. What is your recommendation?
So IGL is a strong breakout. In fact, we discussed this stock extensively last week as well. There was this big gap, day where the stock, opened up higher, closed almost 5-6% higher, and the volumes were, extremely strong that day. Post that, it went to a 3-day, 4-day consolidation, and now we're seeing a continuation breakout. So the pattern is very strong for IGL, and the net buyers are still very interested into the stock because you see the demand, pushing the stock prices higher. So I think that's a good, chart to look at. 355 could be an immediate target for IGL. Would recommend a buy at current levels and stop us at 333.
Okay, well, unfortunately, with that, we'll have to wrap it up because we're completely out of time on this edition of Market Fatafat. So, Samit, thank you for joining in, sharing your technical strategies. Kunal and Jayesh, to you as well. We'll wrap it up. Coming up next is Markets at Noon.